I'll be speaking about how the banks are poised to emerge stronger post-COVID-19 and how they're setting the model back in a new and a different way post-COVID-19. And definitely we accept it as a new normal. Myself, Vartul Mittal, I have been advising various clients across banking, financial services, and insurance industry over the last 14 plus years. And I specialize myself into data analytics, cloud adoption, and intelligent automation. So I'll share my few learnings over the last couple of months that when I've interacted with multiple CXOs in the industry who are my peers, how they have been doing things right to come out better for the emerging model. We see that there are multiple ways where banks are rebuilding trust and supporting the entire customer base they have. And when I look at the customer base where they are supporting, they are completely trying to overhaul how they manage this entire downturn. So there are four levers which have been identified as per the detailed analysis and studies which are helping rebuilding trust. First is the physical lever, where we develop the trust with our physical space and we ensure it is safe for all the stakeholders who operate in the physical space. Second is the financial trust, which talks about how we trust our financial concerns are being served and we manage them very well. Third is the emotional trust, where we manage how emotional and social needs are being safeguarded during this pandemic. And fourth is the foremost important digital trust, which talks about how we trust our information and we assure each one of us to all our clients that it is safe. So moving ahead, when I talk about all the different levers of trust that we see, I have been seeing that how these banks have been coming up with a better phenomena. So there are five different ways. First is they are disbursing stimuli packages. They are helping companies get access to greater credit line so they can manage their working capital during these bad times when there is a less flow of cash. Third, they are providing counseling services to minimize negative financial effects. That is one of the most important factor in current times. And fourth is they're offering payment holidays and waiving charges. So that is something extraordinary that has happened and where banks have came out very well and shown empathy towards multiple areas of concern. And fifth is they're providing self-service tools and helplines so that can serve as a supporting need to all the customers they service. Moving ahead, when you talk about the different benefits of universal banking model with a more diversified set of business outcomes, then we look at it, how are these businesses are playing out. So primarily there was a practice in Europe region which was very most common, but now it has emerged out as a practice which is being adopted by different banks globally. Similarly, when I talk about different banks globally, banks in India are also tying up into multiple areas and where they want to showcase that how they can partner with fintechs and other companies to provide such bouquet of services to their clients. And when I talk about these benefits which emerge as one of the larger set of benefits, we see that these benefits come out with a model which has low cost, higher output, and better products. Second, it has got lower administrative cost. Third, upselling and marketing becomes much more easier in these current times. And fourth, the entire improved trust and low risk due to diversified nature of businesses is the one of the key benefits, or I'll say the outcomes, which we see when we talk about the universal banking across retail, across wholesale banking, and the investment banking, which forms the overall grid of the space we are mentioning about. So whether it's in Europe or India, there has been a change where businesses are playing out and have become much more diversified. Now, when we talk about this crisis, which is delivering a radical change to all the banking businesses and operating models. So there is a huge shift that is happening from physical to digital. Banks are trying to make banking simpler, safer, and more personalized. How? You can see on my screen, uh, I've captured the most important factors where we see the banking becoming more digital than physical. First is the digital signatures and the video KYC, where we can have much more faster closures of branch and offices due to COVID-19, and now we have seen that there's a shift where we have moved towards the digital services where eKYC was already there. Now we have video KYC picking up by most of the banks, and we have the digital signatures. So that provides the authorization or security from the users or the customers end, where we have much more authentication. Second is face, touch, and voice IDs. So when we see today contactless payment methods and effective fraud protection has happened because we have got different ways how we can measure and we can identify a fraud much more accurately and we can resolve the disputes much more faster. Third is reduced demand for physical channels. Right now, we have repurposed ourselves with the real estate and needs and established smaller business hubs which can service customers much more faster and without they're more of a like a borderless regions where we can have much more faster access to response to our customer queries. Then comes the upgraded corporate banking. We can see that corporates are favoring easy and quick solutions similar to retail customers. Now the boundary has become much more thin as compared to what it used to be pre-COVID. Next, what I would like to touch upon is the customer experience. Customer experience is all about how the customer interactions were happening before, and now when we do customer interactions, which is much more self-serve or over a conversational AI bot or uh, over a method where we have much more non-voice options. That has increased the level of serviceability to our customers. And all this is happening because when I talk about digital, that is one of the most driving forces. All of these things which have happened in the industry in last recent 8 months in a much more faster manner has been due to the right use of data and analytics, where we had the opportunity to collect data and leverage it to deliver connected and more personalized experience through omni-channel scenario. Yes, so that covers one of the larger area where we talk about shift from physical to digital. Now, when we move ahead, I like to share that when we talk about new customer offerings to the new normal, this is one of the most important point how we are adapting ourselves to deliver something much more newer to our customers. First is the subscription models to deliver bundled services that has came into existence. Second is advanced risk management using smart analytical capabilities. Third is highly customized and individualized experience by leveraging data. Like I reinforced in my last slide also, we have to leverage data and analytics at, at best to our abilities so we can make much more insightful decisions and can deliver a far more superior customer experience. Next is when we look at the comparison between the banking trend line and the different industries trend line, and finally the oil and gas trend line, which is the least mature industry. Why I've taken oil and gas because in comparison to banking, banking is the most mature industry. Oil and gas is a much lesser mature industry. Now you can see the trend over the last 3 years. We have seen different business models emerge where we have moved from the older business models to much more low cost or I'll say business models which are further moving very steeply towards the sustainable business models, which are much more newer business models. And when I talk about these newer business models, where we see banking is one of the on the highest side of the curve. We see that these all business models are emerging because when we talk about low margin operating models, where we have restructured and we have done cost optimization, then COVID-19 has definitely been an eye opener where we have improvement in terms of different opportunities we have realized and we have captured them as a benefit to move ourselves from a old model to a more sustainable digital model. Third is the investment focus on end-to-end digitization and automation has actually gone up much higher. Banks are much more open today to deploy cloud, to embrace digitization, and the automation of processes which was happening at a business unit level has grown up at an enterprise level. So that is a much more faster trend, or I'll say adoption that has happened in last 8 months, which we could not see in last 5 years. And the key focus area is definitely how we bring zero or no latency and with zero touch points and with completely digital processes. So these are the radical changes which banking sector has adopted to drive themselves better during and post COVID-19 crisis. And the last one, when we talk about this crisis being an innovation in the sector to enable some institutions, where we talk about how the first is the value exchange. In the value exchange, we see that there is a right ideas and right time being shared with the right set of people. Second is we have diverse participants where we have right people to co-create the right thought leadership, right solutions. Third is the right landscape to collaborate through shared capabilities where partners, vendors, customers come together jointly and they bring fintech solutions which are contactless payments like facial recognition and wearables, wellness bot, psychological well-being of employees, AI-based enhancement tools that come into play, and where we move away from the legacy solutions to much more advanced solutions. And finally, we have the because we now have employees working remotely. Definitely, we can't leave that important point unturned, where we have remote employees working in secure environments, maintain uninterrupted solutions. And one of the final lever of the entire innovation ecosystem framework is the rules of engagement, where we have shared risk and accelerated learning. For example, we have now contact center on cloud, where we can handle queries by voice bots and chat bots with a 24/7 availability and auto scaling. So these are the levers which we see that how the entire ecosystem has been re-established with much more infusion of innovation. And we see that how banking institutions will emerge very, very strong as we move ahead, and we have already dwelled and moved as a very progressive sector into the from the crisis towards more of innovation. And that's majorly points from my side. Thanks a lot, all of you, to be a patient listener.
For more updates from CXO TV, please like and subscribe to our channel.